In this presentation, we will continue on to part 14 of our partnership comprehensive problem, recording the sale of securities, which will be done on Schedule D. Here we are on our 1065. We're then going to go down to page 4 to see if we're in balance before, let's go to page 5 to see if we're in balance before we start our process. In our Schedule L, our balance sheet, we look like we are in balance, so we're good to go. We are going to be recording the sale of securities. So you'll recall last time that when we entered the data, we had the security sale recorded here at the 1,350. We made it yellow, made a note of it, and we simply put that full gain in basically the income section. But really what happens is if we imagine the sale that happened here, it probably was a sale of stocks or something like that, where we had to have the sales price and the cost. Therefore, we should record the whole thing on the Schedule D, and there might also be a Schedule K adjustment as we do so. So there could be kind of a two-part component to this. We got to record the sales, which would actually had a sales price, and the cost on the Schedule D, and then possibly record this on a Schedule K adjustment. So let's go down and take a look. We're going to need more detail. This is just like with an individual return. You're going to say, all right, they sold stock or something like that. I need then the information on it. Now, we didn't let that stop us from pushing forward because we put the net sale on the tax return, and we still were able to input the tax return. We didn't say, oh, I don't have the basis or the sales price, so I can't push forward. No, we put the information in the tax return, we reconciled, we got all the way to here, and then we're going to get the information for the sales price, which in this case was here. So if we look at that, we're going to say that the sales price was this, the 3,650 minus the 5,000. That's where we're going to get the 1,350. So that still ties out to the gain of 1,350. However, we want to get there by putting it in on the Schedule D as opposed to putting it into the income section. In other words, if we go to the tax return and we go to the detail and we go to the income section, we have put that into other income here, the other income for the gain on the securities. So there it is here. We're going to now use the Schedule D to do this. Now, I typically jump to it, so I go to the forms, and then I'll go to the Schedule D on the left-hand side. And so here's our Schedule D, capital gains and losses, and see if there's anywhere I could jump to the data input. Okay, so here we have the data input screen. Now, there could be multiple, just like with an individual, you might have to go through and have multiple sales that you'd list out on here, different sales of securities sold at different points in time. I'm going to list it all out as one sale that's going to happen here. So we're going to say that we sold stock. I'm going to say stock of some kind, investment in stock bonds, stocks. We're going to say that the date acquired, I'm going to say a negative of 010100, and that's going to say various on the tax return. And then I'm going to say that, and the main point here is that you want to have a distinction between the short term and long term. If you have the stockbroker statement, just like an individual return, hopefully they broke that out for you, and you'll have that distinction between the short term and long term. So when you have the date acquired and the date sold, the main thing, primary thing the tax return is looking for is this a short term sale, short term capital gains versus long term. So then we're going to say that the date sold is going to be sometime in the current year. I'm going to say, oh, we should have that. What did I have in our data here? We don't have it. I'm going to say 06/15/19 because we're in the current year 19. So the date sold obviously would be in the year that we're working on. The sales price we said was the 6,350, and the cost was 5,000. The difference between those two then being our gain. So then I'm going to go back to our forms and see what that does. Let's see what happens here. Going back to the forms, and we're on the Schedule D. You'll note that it's down here in the long-term capital gains, similar to if we had a individual long-term capital gains with the net gain being at that 1,350. So that looks good. Let's go back over and see if it puts us out of balance in the 1065. We're in the 1065. I'm in page 5 of the 1065, scrolling down, and we are out of balance now because it put the other side somewhere else, right? And if I look at schedule or page 4 within the Schedule K, you'll note that it's down here. The net long-term capital gain is at that 1,350, which means we'll have a Schedule K kind of adjustment there as well. So what we need to do then is take it out of the income. That should put us back in balance because we have included it in other income. So I'm going to go back over here. We're going to go to the ordinary income, the income line. We're going to go to the other section. Going to scroll down, and we have the income related to the gain on securities, the 1350. I'm going to scroll down to the Schedule K, and we're going to say negative 1350. So negative 1350, and then I'm going to say OK. See if that puts us back in balance. We'll go back then to the forms, back to the forms. We're then going to go to page 5 and scroll down, and we're back in balance here. So that looks good. Now we're going to go to Excel, and we'll enter this into Excel, see if we can tie out our income lines. So I'm going to go back over. We're going to go into Excel, and what we're going to do is just reallocate this gain, take it from here and put it down below in the Schedule K type items. So similar process we did before. I'm going to put we should probably put another note here. We're going to say record Schedule K adjustment for capital gain and something like that, so we can go back and see that later and be able to pick that up. So we're going to say we have the gain here. The other side's going to be going down to our Schedule K, so that's going to be the capital gain Schedule K. That's going to be for the amount of the 1350. That'll be the debit and the credit. Let's go ahead and post that out and see if it does what we would expect. Should bring this down to 0. And then put the other side to the capital gain. I'm going to say in cell Q32 equals, and scroll on up to that 1,350, bringing it then down to 0. Then we're going to go to the capital gain for the Schedule K. Here's the capital gain for the Schedule K in Q43 equals, scrolling back up, there's the credit, and enter. So there we have that. Now we're going to match out our income lines. We'll match out our income lines. So I'm going to go back to our tax return. We're going to go to page 1, scroll on down to page 1. We're at the 284,250. 284,250. There's the 284,250 here. And then we'll go back to our tax return. We're going to go then to page 4 and see what our adjustments are here. So we have the 284,250 plus the 1500 plus the 750 plus the 1350. That's the 287,850. So if we go back to our tax return, there's the 287,850, which is our 284,250 plus the K1 adjustments up top, the blue items. And then we're going to go back to our data and go to page 5. Scrolling down, we're still in balance. That looks good. And then we're in the book amount is the 355,278. So there's the 355,278. And then we get over to the bottom line, or the other side is the 287,850. So that's going to be the 287,850, which we can get in two ways, as we did before, the jump. One jump to here, to the first page of the form tax return, and then the Schedule K adjustments over here. Or you can recalculate and mirror what actually happened and get to our book number down to that 287,850 with these adjustments as we've seen in the past, this number matching that number.